Today's date is November 18th, 2016. Today I want to quickly go over a setup that appeared yesterday in this would have been late London, early New York session. There was a lot of confluence with it, and I really wanted to break it down and show you this is how I look at trades when I'm looking to get into something. I don't just look for one or maybe two things that are telling me to get into it. The more that I have, the more confident I feel, and that's really going to help you to develop as a trader if you're able to spot these things, especially when they all come together, because the more of these things you have working in your favor, the more likely you're going to see your trade pan out the way you want it to. So right now you're looking at a Euro franc 30-minute chart. I drew these green lines up here because these were the actual daily R1 and R2 levels. They may be off a few pips, but it doesn't really matter that much. But these are the daily R1 and R2 lines that were on your charts yesterday. Today, these are what we have going on, the red ones, the blue, and the green. As you can see here, those are the ones for today because this repaints every day at midnight. But anyways, the thing that really caught my eye was this whole range right here. You have really the start of it right here, all the way over here. This was at 10:30 on November 15th. Finally, the breakdown happened on November 16th, 17:30. So you were talking about a 30-hour consolidation period here. So what has happened here is you have a 30-hour consolidation zone. Anytime you have a consolidation zone in the market, it's going to act as a level of support or resistance. So you have a 30-hour consolidation zone right here. You have a collapse down through it, and then you have a retest back up into this area. So you should have been looking for shortable opportunities up in this area. It could have been anywhere, honestly, from the lows down here all the way up to the highs. But this is really a zone you should have been watching. You had the daily, I think the daily R1 was right at the top of that candle, maybe like a pip above it. But you have the daily R1, and then you have the daily R2 up here. So the R1 is going to act as resistance. The R2 is going to act as resistance. So this should have been an area that you were looking for. If you go to the 1 hour time frame, again, this area is what I was watching. There's not a lot to show you on the 1 hour time frame other than the fact that we were very overbought up here. You can see this push up. Here's stochastics, a double top, and then you can see stochastics a little lower. This is divergence on the stochastic. So you did have a little bit of divergence there, but the problem with stochastic divergence is it's really hard to figure out and point out for sure until after it's said and done. So I really don't pay too much attention to that. The H4 is really what got my attention here. One of the things that I really watch for when I'm looking at my trading is I'm watching for disconnects on the THV here. You can see that we had a push down here. This was the fall. This was the consolidation. Right there, let me go back. This consolidation here on your 4 hour time frame was this right here. So you're going to see that the consolidation was up to the moving average. This coral is very strong support or resistance, especially if you're in a pretty hefty trend making lower lows like we have been. So you had the consolidation zone right here, and then you had a push down towards the support. And then right up here you had another push up into the coral moving average. So on the 30-minute time frame, what you're dealing with here is you have this huge area of consolidation which will act as resistance. You've got the daily R1, the daily R2. Both of these are going to act as strong resistance. R2 is really my favorite. Usually those hold up the best. So this would have been the most optimal entry, even though the market unfortunately did not go there. So that level would have been just above the coral. It was the daily R2. We have the daily R1 down here. So looking at this, you have a major area of resistance because of consolidation. You have the push down. So you have this acting as resistance. you also have the coral that's going to act as resistance. So you have more resistance right there. If I go to the daily time frame, this level up here is also the upper band. If you're in my course, you know exactly what this means. So this is definitely an area to watch. So on the daily, you had resistance. On the 4 hour, you had resistance acting as the coral. On the 1 hour, not a whole lot to show here. The 30-minute, again, you have this huge area of resistance here. So you had many, many, many things in your favor for this trade. So this is definitely something that should have been on your radar. Going down to the 15-minute time frame, the other thing I want to show is recently I did a video on double tops and the best ones to take and the ones you don't want to take. This was actually a pretty fair example of one that you may have wanted to take. You have a strong push up. You have a nice pull back down. 1, 2, 3, 4, 5, 6, about 6 or 7 candles to the low. And then 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 candles to the high. So we've got a pretty quick push down with a slow move back up. Typically speaking, these are pretty good setups for a double top. If this would have pulled back and then quickly went back up to the highs, this would have been much less attractive as a double top to me. Because it did this, though, you have a nice looking double top. It's kind of the shape of an M. When I took my stock training about 13 years ago, M means murder, which means it's going to drop. W means winner, so it's going to go up. But anyways, you have this nice little pattern on the 15-minute. Not only that, when you came back up to retest it over here, you were overbought on stochastic. You had major divergence on the THV. And you had a little bit of divergence on the MACD as well. Whoops, that's not what I want. You have a little bit of divergence right there. The THV is really what I pay attention to for divergences, though the MACD I don't pay too much attention to. It's not really that helpful. Just kind of like a filler on my screen here. I do monitor it a little bit. But anyways, so again, you can see this pattern was pretty bearish looking into resistance, which is the key. You never want to take a double top or double bottom if you don't have other reasons to jump into a trade. That can be very dangerous. But because we were at such a huge area of resistance, this was actually a pretty good setup. So going to the 5-minute time frame, let's see if I can find it here. This was it on the 5-minute. Again, not a whole lot that I can show you here. This is the pullback and then the long push back up. You can again see a lot of divergence. Let me remove this. There is some divergence on the 5-minute. And in fact, this last little attempt before the collapse, you can see you had a lot of divergence on THV. And again, going back to the 4-hour time frame, I want to touch on this a little bit more. This push up into resistance, look at your THV lines. These were red. The narrow one was red and still dropping as we pushed up into resistance. Anytime you see a disconnect between price and THV, there is something not right with the market, and you have to pay very close attention. You don't want to take a trade just based off of that. Again, you need many confluences to take a trade. The more you have, the more likely your trade is going to work out. I could probably show you more here, like this, for example. This push down here, let's zoom in a little bit actually. This push back down to the lower band, you had THV green crossing up. It did not drop with price. This is a very bullish indicator. So you saw price rallied up from the lows down here of 107.01 all the way up to 107.59, which is about 50 plus pips on a Euro franc trade setup there. Again, you don't want to take it just because of THV, but again, you have this right here, push up. THV remained red and was dropping, so again, we saw the continuation move. When price goes up, THV should go up. If it's not going up, there's something wrong. I could go through here and give you example after example. So THV is something that I really monitor for my entries and to see kind of what the market's doing at the present time. So again, on the daily, you had resistance up here. On the 4-hour, you had THV divergence, and you had this coral resistance. On the 1 hour, you were overbought. 30-minute, again, you had this huge area of consolidation acting as resistance. On the 15-minute, you can see this nice little double top pattern, which was giving you a little more precise entry. You have divergence there. And then on the 5-minute, of course, not a whole lot to talk about here, but you did have some divergence up on the 5-minute as well. And if you are watching the 15-minute for a double top pattern, if you're watching for a double top on the 15, you would have definitely wanted to pay attention to the 5 here, because you can see that right here was a major disconnect, and this was telling you the highs were probably in, and it was indeed going to fall, and down she went. So just wanted to do a quick video today on this Euro franc. This is really how I pull everything together when I'm doing my market analysis. I look at many time frames. I don't just look at the current one I'm on. I definitely watch the higher time frames like a hawk, but you definitely got to watch the higher time frames. Even check the lower time frames to see what they're saying, and it'll also help you to get a more precise entry. So that's all that I really have for you today. If you have any questions at all, feel free to reach out to me. I'd love to help you. All right, guys, have a great day. Bye-bye.